So, how do you prevent bigger losses when trading cryptocurrencies, or simply how not to get liquidated? If you're wondering what liquidation means, liquidation is when you go against the market or against the price movement. In practice, let me show you. If I want the price of some coin to go up, liquidation means the price instead moves down. On the chart, there's always a marked liquidation price. If the price drops to that level, I lose all the money I put into that trade. For example, if I trade with $100 and the price goes to liquidation, I lose all $100. This applies whether you're trading with bigger or smaller amounts. Just 2 days ago, at the start of Monday, we had a massive liquidation event in crypto. Almost $2 billion was liquidated. That means $2 billion was completely lost by traders. Why? Because after the recent interest rate cuts, almost everyone thought we were in for a strong bullish run. But what happened? Exchanges, big players, market makers, they pushed prices down. As a result, many long positions got liquidated exactly as I just explained. So, the big question is, how do you prevent liquidation or at least bigger losses when trading crypto? Important, this does not apply to spot trading. With spot, even if you go down 90%, as long as the project recovers in the future, you can eventually be profitable. Here we're talking exclusively about futures trading, where we use leverage. Leverage means the exchange gives us extra money to trade with a bigger position. For example, if I only have $100 and use 10x leverage, it's as if I'm trading with $1,000. That increases the potential profit, but also increases the risk of liquidation. 1. Use a proper stop loss. The first and most important way to avoid liquidation is to always use a stop loss. A stop loss is simply a price level where your trade closes automatically, so you don't lose everything. For example, if I open a trade with $100 and set a stop loss, maybe I only lose $13 instead of the entire $100. Most traders put their stop loss just below the last low for long trades or just above the last high for short trades. For example, if the market is in a downtrend and I go long, I might place the stop loss just below the last bottom. This way, if the market turns against me, I lose only a small part of my capital, not all of it. Duh. But remember, market makers and exchanges see where most orders and stop losses are. That's why you don't want to put your stop exactly at obvious levels. Place it slightly above or below to reduce the chance of being hunted. 2. Trade with smaller amounts. Another option. You can skip using a stop loss if you're trading with very small amounts. For example, if I risk only $20, $30, I accept the possibility of losing it. Why? Because if I have a larger target zone, the reward potential far outweighs the risk. For example, if my downside risk is 14%, but my upside target is 50% or even more, then it's worth it. With 10x leverage, that could mean 500% profit versus only 14% risk. 3. Use lower leverage. This is another key method. The higher the leverage, the closer your liquidation price will be. If you use 10x, liquidation may be very close. But if you use only 5x or even 3x, your liquidation zone is much further away, giving you more breathing room. Of course, nothing is 100% safe, even with low leverage. Big players can still push the price down. But it's always safer to combine stop loss plus lower leverage. 4. Use DCA strategy in futures. Another way is to use a DCA, dollar cost averaging strategy. If your trade is moving towards liquidation, you can add more funds at that level, lowering your average entry price and moving the liquidation price further away. This often saves your position and gives the trade more room to recover. Final advice. In trading, there is no way to guarantee zero losses. Every trader loses sometimes. The key difference is how much you lose and how well you manage risk. The best advice is, always set a stop loss or trade with small amounts you can afford to lose. Use low leverage, 5x or less if you're a beginner. Combine stop loss with smaller leverage or use a DCA strategy. Never risk your full capital in one trade. Always aim for setups with a higher reward to risk ratio. Enter trades at strong momentum and accumulation zones, not after price already pumped. This way, you minimize the chances of being liquidated and increase your odds of long-term success. And finally, if you want more help, signals, analysis, and especially education, join my premium group. There you learn exactly how to trade like this, manage risk, and grow step by step. And as always, if you're looking for a regulated EU exchange where you can safely buy, store, and trade not only crypto, but also stocks, ETFs, and even precious metals, I personally recommend Bitpanda. It's one of the best for the EU, has its own Vision token, and even a Bitpanda debit card to cash out your assets directly. Links are in the description, along with the link to my free Telegram group. That's it for today's video. I'll see you in the next one.